And good morning to all you wonderful melonheads. Happy Monday. Today is bailout day. First Republic Bank was just bailed out again, second time in a month. Once again, JPMorgan is behind the deal, but this time it's different. At risk of sounding cliche, this time is different. Why? Because the key part of this deal, the one takeaway, if there's one thing you take away from my stream today, it is that you are holding the bag for this deal. The losses from First Republic Bank, which are mainly being driven by sweetheart interest-only mortgages given to banking executives all over the country to buy multi-million-dollar houses in the Hamptons of New York, Beverly Hills, and wine country on the West Coast. That's what drove the losses at First Republic Bank. The losses from those sweetheart mortgages for the uber wealthy are going to be socialized among the public via the FDIC. So you will pay for it, and I will pay for it. And JP Morgan, well, let's just say this right now. Mr. Jamie Dimon over at JP Morgan, he is laughing all the way to the bank because JPM is making out like bandits on this deal. They're breaking at least two laws that I can think of, not a lawyer, but I know of two laws at least that are being broken by this deal. Number one, the Dodd-Frank Act says bail in is what happens when a bank fails. That was supposed to eliminate the moral hazard of the banking system. When a bank failed, all uninsured deposits at the FDIC over $250,000 should be converted into equity in the bank, which means the people with huge accounts take the haircut, not the public, not the taxpayers. That was the whole point of Dodd-Frank, was to prevent the public and the taxpayers from eating the cost of bank bailouts ever again. And then the second that became inconvenient, throw that law out, gone. And the other law that they broke said that no one bank is allowed to become 10% of all deposits in the U.S. It was meant to prevent any single bank from becoming such a behemoth that it presented an existential risk to the financial system. Well, once again, they just threw that out in the middle of the night while we were sleeping because JP Morgan will now be more than 10% of all deposits in the United States. So who needs laws, right? If we just change them the second they become problematic. All right, with that, we are going to shrink my big melon of a head, and let's see what's going on in markets right now. Markets should be loving this deal. Not really. S&P 500 is up 2 points right now, essentially flat, 4,166. The Dow Jones is up 47 points, or 0.14%, at 34,145. The NASDAQ is down 19 points, 0.16%, at 12,207. The DXY right now, it's about flat for the day, up 5 basis points. It is giving up a lot of its prior gains right now, as it should, because this is the printing press. This is the weakening of the dollar. This implicit guarantee of all uninsured deposits is so dangerous for the dollar, the DXY is reacting appropriately. It should be a lot lower than it actually is. Looking over at the bond market, it looks like yields are higher pretty much across the board. The 10-year is at 3.48 right now, up 3 basis points. The spread between the 1 month and the 3 month is currently at about, about 76 basis points. That's some quick math off the top of my head. Pretty much unmoved for the day. The 3 month yield down fraction of 1 basis point. The 1 month up a little bit. The commodity space, check out the shiny metals this morning. Gold is up $10 right now, a half of 1%. Back over 2000 at 2009. But the big move this morning, look at silver. Currently up, only 78 cents, 77 cents. Looks like at open market smash, because take a look at the chart in silver this morning. We were up close to $1 at one point. Looks like we hit an intraday high of about 26.21 this morning. Although now, as soon as opening bell go ding, price smashed down. Are they really doing this again? We'll see. Not too surprised. We're going to talk a little bit about JP Morgan and their history with precious metals in just a minute. Elsewhere in commodities, we've got crude oils down $1.45 at 75.33. Natural gas down a nickel, $2.36. Platinum and palladium are pretty much flat for the day. Platinum at 1,096, palladium at 14.96. Here's the big story, folks. First Republic Bank is seized, sold to JP Morgan, in second largest U.S. bank failure. Keep in mind, the second, third, and fourth largest bank failures in U.S. history all happened within a month. And they're calling this the mini banking crisis. Hilarious. The mini banking crisis. The lender teetered for weeks following Silicon Valley's collapse in March. Regulators seized First Republic Bank and struck a deal to sell the bulk of its operations to JPMorgan Chase & Co., heading off a chaotic collapse that threatened to reignite the banking crisis. I'm sorry, did the collapse of First Republic only threaten to reignite the banking crisis? Does it not feel like a little bit of banking crisis ignition may have occurred last week? Weren't we reignited when another bank failed? The bank that they bailed out last time to stop the crisis ended up failing. So, I mean, they're like, whew, that was close. We almost had a crisis on our hands. Second largest bank failure in U.S. history. Feels a little crisisy to me. I don't know, you guys. I just throw them out there. You guys do what you want with them. JPMorgan said it will assume all of First Republic's $92 billion in deposits, insured and uninsured. That's huge. Uninsured deposits are being protected here. Put a pin in that. We'll talk about that in a second. It's also buying most of the bank's assets, including about $173 billion in loans and $30 billion in securities. And JPMorgan buying those $173 billion in loans, that's the bailout right there, folks, because within that $173 billion loan book is all of those interest-only mortgages at less than 3% interest rates for multi-million-dollar houses in some of the most uppity, wealthy neighborhoods available in the United States. Loans made mostly to other bank executives. And when those loans took the bank down, taxpayers are footing the bill. So you and I are financing sweetheart mortgages for people like Jamie Dimon. I don't know if Jamie Dimon actually got a mortgage. I don't want to mention him by name, but he is the face of bank executives nationwide. And the taxpayers are footing the bill for cushy mortgages, interest only, sub 3% interest rate mortgages for the uber wealthy. As part of the agreement, the Federal Deposit Insurance Corporation will share losses with JPMorgan on First Republic's loans. In other words, they're going to socialize the losses. This is not capitalism, folks. And I can tell you, all the little comrades at UC Berkeley and all the Antifas and all the little socialists, they're going to sit there and they're going to use this to bash capitalism. This crap right here is not capitalism. This is socialism. This is socializing the losses among the super wealthy with the public. That's not capitalist. The agency estimated that its insurance fund would take a hit of $13 billion in the deal. JPMorgan also said it would receive $50 billion in financing from the FDIC. This is amazing. JPMorgan is buying the bank, but the FDIC is giving them a $50 billion loan with which to buy the bank. So is JPMorgan even out of pocket? They're loaning them the money to make this work. Well, where's that money coming from? Is that coming from the Treasury General account? Did the X date just move up closer? You know, the debt ceiling default, all that? Well, where's the FDIC getting the $50 billion to loan to JPMorgan for JPMorgan to buy this bank and bail out the uninsured depositors? They're playing with fire here, folks. As for comment, JPMorgan CEO Jamie Dimon had this to say: "We are Borg. Lower your shields and surrender your ships. We will add your biological and technological distinctiveness to our own. Your culture will adapt to service us. Resistance is futile." And folks, I just want to remind you that the U.S. Department of Treasury has explicitly said that this deal is illegal, even though they just signed off on it. Whoops. Talked about this in my live stream last night. Section 622 of the Dodd-Frank establishes a financial sector concentration limit that would prohibit a financial company from merging or consolidating with or acquiring another company if the resulting consolidated liabilities would exceed 10% of the aggregate consolidated liabilities of all financial companies. In other words, no bank is allowed to become more than 10% of the market. Well, the combined JPMorgan First Republic is more than 10% of the market. They are breaking the law. This deal is illegal. They don't care. They just did it. This deal, signed last night while we were all sleeping, includes all regulatory approvals. And check out some of these provisions here. This is courtesy of Zero Hedge. JPMorgan Chase acquired substantial majority of the assets, assumed certain liabilities of First Republic, $173 billion of loans and $30 billion of securities, approximately $92 billion of deposits, and $28 billion of the Federal Home Loan Bank advances. JPMorgan did not assume First Republic's corporate debt or preferred stock, so stockholders and the bondholders, you get wiped out. Bye-bye. No tears shed for them, but you still own First Republic stock at this point, good luck to you. JPMorgan Chase will make a one-time payment of $10.6 billion to the FDIC. I don't understand the point of that because it says all the way down here that the FDIC will provide a new $50 billion 5-year fixed-rate term financing. So why is JPMorgan giving them $10 billion just to have the FDIC give them back 50? Makes no sense to me. And this is what's hilarious. Under transaction overview, the FDIC will provide loss share agreements with respect to most acquired loans. Single-family residential mortgages, 80% loss coverage for 7 years. Commercial loans, including commercial real estate, 80% loss coverage for 5 years. Which means if JPMorgan has to sell the assets that they're acquiring, excuse me, if JPMorgan has to sell one of these sweetheart mortgages for these mansions in the Hamptons that First Republic made, or if they have to sell any of the commercial real estate, like the office buildings that nobody needs anymore, the FDIC will cover 80% of the losses. That's amazing. So all the risk of this deal is being shouldered, not all of it, 4/5, 80% of the risk is being shouldered by the taxpayers. JPMorgan is only taking 1/5 of the risk, but getting all the benefits. JPMorgan will also repay $25 billion of deposits from large U.S. banks, which of course included $5 billion of their own money. And the FDIC will provide a new $50 billion 5-year fixed rate term financing. The FDIC is loaning them the money to do this. It's just amazing. All regulatory approvals received, and the transaction has closed. This is done. No court challenges, no nothing. They already rubber stamped it. Yellen has approved it. The Treasury's approved it. The FDIC has approved it. They broke the law. It's all right. They already signed. It's done. First Republic branches and offices will open as normal, committed to treating employees with respect, care, and transparency. I just love that statement thrown in. Oh, we're still in the tree with the nest and the trust and all that good stuff. Oh yeah, respect, transparency. Great. Lovely. Thanks for putting that statement in there. I think the Kobayashi letter summed this up pretty well here. They put this one out on Twitter. By the way, the Kobayashi letter, you guys should be following them on Twitter. This is a really good feed. They bypassed the laws against acquiring a bank while controlling 10% of U.S. deposits. They're sharing $13 billion in losses with the FDIC. That is your money. You will foot the bill for that. They're receiving a $50 billion loan from the FDIC. They effectively bought back their own deposits, expect a profit of $5 billion over the next 5 years. They've already added $18 billion in market cap this morning. JPMorgan stock is off to the races right now. They are making out like bandits here. This crisis has taught us that rules don't matter in times of panic. And that last statement there just beautifully summarizes it. And they're right. This is not capitalism. When you don't have a free market, when you don't follow your own laws, when you set them aside the second you start to lose money, that's not a free market. That's not capitalism. That is, I don't even know what that is. Oligarchy, kleptocracy, socialism, you pick. Take the worst qualities of all of those systems. That's what this is. Rules don't matter in times of panic. And I would just remind you guys that this bank, this behemoth, JPMorgan, that has just been allowed to become more than 10% of the U.S. banking system, that has just been, they just cleared the way. The whole point of that rule was to prevent any one bank from ever getting so big that they threaten the whole system and thus inviting a moral hazard where the banks know they could never lose money because the public will foot the bill. That very same bank was labeled a criminal enterprise by the U.S. Department of Justice not too long ago. This is from, what was this dated? September 16th of 2019. JPMorgan's metals desk was a criminal enterprise involved in racketeering for hundreds of thousands of instances of spoofing the price of gold and silver. This criminal enterprise was just allowed to become even bigger against U.S. law, and they cleared it in the middle of the night. And, I gotta love this statement, courtesy of Disclosed TV. Just in, U.S. Treasury says the country's banking system is sound and resilient after regulators seized First Republic's bank and sold it to JPMorgan Chase. Well, thank you, Justin. Don't I just feel better already? And again, a lot of people are calling this the mini crisis right now. Charlie Bilello, he says this pretty well. This mini crisis that they called it, the one that, it was almost reignited, according to the Wall Street Journal, Total assets of the 511 U.S. bank failures that happened from the GFC through 2022, starting in 2009, were $339 billion. All 511 U.S. banks that failed for that whole decade plus, $339 billion. The total assets of the 3 U.S. bank failures in the last 2 months, $548 billion. Shout out to Mish, who caught this one this morning. Oh, and by the way, that $548 billion, that doesn't even include Credit Suisse, which was even bigger. And look at JPMorgan stock this morning, currently up 2.84%. It was up 6% at one point. Tens of billions of dollars in market cap is being added to JPMorgan stock right now. Folks, to say this deal stinks would be putting it mildly. This deal stinks to high heaven. This is gross. This is not capitalism. This is greed, corruption, kleptocracy, everything rolled up, put in a blender, press power, and this deal is the slop that you get out. And I got a couple of thank yous I got to say. Where are you guys? I'm looking for you down here. What's going on, Mike Bender? He says, good morning, Jack. Have some tea and get rid of the cold. Yeah, I am still fighting a sore throat. Thank you, Mike. I appreciate the well wishes and the support of the channel. I'm coming down from a nasty sore throat. But you know what? Banks are failing. Mayhem in financial markets. We must press on, brother. So thank you very much for the kind words and for the support of the channel. And thank you, Norman. Nothing to say, just being a swell guy and sends a super chat. I appreciate that very much, Norman. Thank you very much. Just want to say thank you very much, guys, for all your time, for watching the channel. Thank you for sticking with us through the weekend, through this crisis. By the way, we have got a big week ahead of us. Let's just say tomorrow we've got the JOLTS job numbers. That's job openings and labor transitions report. Wednesday, we've got the FOMC press conference. Federal Reserve is going to hike again. We just had another bank failure. Let's see. I don't have this one queued up. What is the CME Fed Watch tool is saying? That there is now a 89 and almost a 90% likelihood of another rate hike on Wednesday. We have had 3 bank failures in the U.S., 4 if you count Silvergate, 5 if you count Credit Suisse, bank failures in the last month and a half, and they're going to raise interest rates again. You know, people said the Fed would hike until they break something. That ended up being incorrect because the Fed has now broken 5 somethings and they're still hiking. So, you know, the Fed will hike until they break something. That would imply that once they break something, they would stop. They ain't stopping. They're going to keep hiking. I'm hearing people say there might be another rate hike after this. All right, good luck with that. What else we have? We have ADP payrolls on Wednesday. Friday, we get a jobs report. Are we going to get a big shock in the jobs report? I mean, this lie about the strong labor market. Are they going to tell us how strong the labor market is, even though every day, thousands of layoffs, headlines all over the place? We'll see. We'll find out later this week. Anyways, guys, that's all I got for this morning. I want to say thank you very much. Thank you to my Patreon supporters for everything you guys do for the channel. There is a link down below. Should you feel so inclined, hi, Mom. Hi, Dad. I love you guys. Thank you to my Blue Wrenches and my moderators for everything you guys do for the channel. You're awesome. Shout out to Mish, who was all over this story before I even opened my eyes this morning. I had Twitter DMs all over the place for Mish. He was all over this thing, even though it happened in the middle of the night. Awesome work, brother. And everybody, until next time, live small and dream big.